Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management, coming to you from Boca Raton, Florida. Today is Saturday, April 12th, 3:44 p.m., bringing you the Revere Roundup Weekend Review. Starting with the trend gauge, still the low 4 red arrows as the leadership is rebuilding, and we're in down mode there, as well as the 21, the 50, and the 200. All major indexes are still below those key long and short-term moving averages. We are in a harsh correction, but we had an interesting week last week with a washout low on Monday, which potentially could be the low. I'm going to go through some slides to get started. Going through the highlights of last week. We saw Monday open with follow-through downside. The S&P bottomed down 4.6% after Thursday and Friday's waterfall sell-offs of almost 4.5% and 5% last week. We made lows within the first 15 minutes of the open, and throughout the week we held Monday's lows and traded inside, making higher lows and really higher highs all week. So not a bad week. We had a huge reversal on Wednesday after a gap down open, once again with Trump holding off on higher tariffs for 90 days on all but China. And it resulted in the second largest up day in history, with all indexes up and the NASDAQ up 12.16% on the day, which I believe was the second biggest day in history. Also in the bond markets, bond prices were crushed in both the 30-year and the 10-year. 30-year yields jumped 11.14% to 4.877% versus 4.3% last week. Obviously heading in the wrong direction, and not what Scott Bessent and Trump, as well as the refinancing of the $7 trillion in debt that's coming up through June. So this is heading in the wrong direction, and this was a big reason why we probably saw Trump back off on the tariffs. Also, the 10-year Treasury bond prices fell, with the yields up 12.75%. We shot up over 4%. That was up from 3.985% last week. So ripped in the yields. Speculation that foreigners were dumping our bonds, potentially China, Japan. On our Friday podcast, Ted went through a lot of scenarios that are out there. I would advise you watching that podcast if you want to hear and be informed of the reasons why the bond yields potentially are up. Also, the U.S. dollar got hammered down 3.14% on the week, and this is the lowest level since April of 2012. Excuse me, I have a cold, so my voice is a little off today. All of this, despite the CPI and the PPI showing the inflation rate was down 2.4% and 2.7% respectively. Also, the University of Michigan Sentiment Survey expectation gauge fell to 45-year lows, with 1-year inflation expectations rising to 6.7. This was the hottest since 1981. Today we got news that Trump exempted phones, computers, chips, solar cells, and flat panel displays, memory cards, and solid state disk drives from tariffs. So this could potentially add fuel for a Monday gap up. In particular, this is helpful for companies like Dell Computers, amongst some of the names. Also, the CMS organization that oversees Medicare and Medicaid, they raised Medicare Advantage payments from 2.23% up to, and they increased it by 5.06% for fiscal year 26. That's a lot more than expected, and it sent some healthcare stocks, which we will look at in our on our stocks to watch list for the upcoming week. We backed off from the extreme fear. We were down to 4 last week. We're up to 13 this week. Monday, we're going to get into a couple of these things we looked at last week, and what potentially leads me to believe that we had a potential low on Monday. The AAII fell once again for the 7th straight week below that 50% level or above that 50% level after an extreme at the end of last week of 61. We were still at 58.9%. Historically, we average about 30% in the bear camp. So this has been elevated for 7 straight weeks. The IBD still put to call, closed the week over 1, which this can stay up in that range, but still fear out there and elevated puts over calls. Last week we talked about the telechart 2000 T2108, and every time it gets below this 15 level, it gets extreme. Then we talked about the 5 being the ultra extreme level that we saw in the crash of 87. We saw the financial crisis lows get down into these single digits, as well as the COVID lows. And I want to show you what we got down to last week. By Monday, we got down into the 4 range. COVID was like 1.5 or 1.7, I think. But we're just splitting hairs here. This is extreme, and only 4% of stocks were above the 40-day moving average, which was extreme. Also, on the telecharts, 2107, this is the percentage of stocks above the 200-day. And you can see here we also got down into the extremes of the COVID lows, and we surpassed the bear market of 22 lows. And looking at the sectors, in general, a big up week for the S&P after a big down week last week. Particular standouts were gold, still leading the market. Huge week for gold. The GDX up 19%. We saw semiconductors up 17%. Well, that was the leverage, but 9.28 on the SOXX. XLI industrials were up 6%. Bonds got hammered. We can see that any bond proxies also got hammered. And in general, emerging markets staged a little bit of a rebound. Bitcoin was flat on the week, and that sums up the sector lists. Individual stock-wise, NVIDIA with a huge 17% rally. OpCo 24%. Decent performance out of the Mag 7 here. Healthcare got hit on, further fears of administration scrutiny and cuts on drugs. Boeing up a huge 14%. Walmart and some of the discount retailers had a good week. Overall, general non-event in some of the utilities. Just a quick view of the foreign markets. Brazil up 9%, Germany up 14%, UK and France up 8%. So definitely the foreign markets continuing to lead out there. Earnings this week are starting to trickle in finally. More banks, and as we get toward the end of the week, we're going to start seeing Taiwan Semiconductor, which they came out last week with their sales forecast, and I believe they were up 36%, which that was better than estimates. So this is going to be a big one to watch for a read on some of the AI chips, such as NVIDIA. United Healthcare, as well as Netflix on Friday, and some insurance companies here. ASM Lithography, another semiconductor equipment company. So definitely starting to pick up a little bit. Still a light week, but some big names toward the end of the week. These were the charts from last week that I showed on the TC2108. Just wanted to go over real quick on our podcast on Friday. Everybody's talking about the death cross that's really going to be occurring on the S&P. We've already hit that on the NASDAQ, but as of this weekend and Monday, we're going to be seeing that 50-day moving average cross the 200 of the downside. In this particular chart, I went through all the instances for 2000 through current and wanted to see what stocks did over the next 2 months when we had that death cross, and then till the end, the longer term, till the end of the death cross. And really about about 63% of the time, the market did end up going lower over the next month or two. Some modest losses in 2020, but basically we found the bottom in COVID pretty fast once that death cross occurred. Some of these lighter sell-offs that took place post-financial crisis, the next month or two were slightly more. So we did see over the next month or so some more downside. 2007, in the midst of the financial crisis, we did see, again, over here, the blue are bear markets. Okay, so we had 4 recorded bear markets since 2000. And these particular ones had some deeper short-term corrections. And really, the bear markets were the only ones that had further losses beyond, a month and a half, 2 months. We had the 22 market. We went 16% lower, 55% in the financial crisis, and 45% lower in the 2000 tech internet bubble. And furthermore, I just added on this chart the number of days it took to get to the lows. COVID, 5 days, so that happened relatively fast. 2018, which we did go down 20% in the S&P, but did not close there, so we didn't have a bear market. That, a couple of weeks there, a month to the ultimate low here in a 15, almost 2 months in 2011, and then 33, almost 3 months here, 33 days, a month to get to the short-term low in 07, and then almost 3 months in 2000. But in the 3 instances of the bear markets where we went on to make longer-term lows, 2022 was 213 days, so almost a year, a little over a year in 2007, and 710 days to make the ultimate low in 2000, which was 2007 and 2007-8 were some pretty severe bear markets, and that ultimate low was hit on 3/6 of 2009. So really in a little over half the times where we have that death cross, we end up on the short term going on to make some lower lows, and only 27% of the time have we seen longer term damage. So finally going over the economic numbers coming out next week. Retail sales, industrial production and capacity utilization, housing starts and building permits, and then we start seeing initial claims and continuing claims. Potentially the Doge cuts will start showing up in here, the Philly Fed Index. So again, we had some light economic numbers this past week, and the bond market did the exact opposite of what it should have done. So that is somewhat still a warning flag out there. Now let's go to the, see here. Start with the indexes for the week. Sure what happened here, but let's go to the S&P 500. You can see this was Monday. Huge gap down open, closed mid-bar, slightly below Friday's level. Throughout the week, we made higher lows every day. We had this huge rally on Wednesday when Trump walked back the tariffs and extended them for 90 days. And then Friday, we saw a higher high from Thursday's level. So we had some contracting range on Thursday and Friday and a decent close on the week. So for the week, big hammer on the week, up 5.7% on massive volume. So this tells me potentially we're in that almost half the time where this golden or this flat cross we may be at a bottom here. So we'll see. We may come back and fill and potentially retest the lows, but I do believe Monday was a pretty panicky bottom based on all the stats. And incidentally, Connor also got featured in Market Watch this week, where he goes through just a ton of different indicators, secondary indicators, and he's never seen them as extreme as they were into this flush. So if you get a chance, go to Connor Bates' Twitter handle and pull up the Market Watch article and look at it. And he also talks about it in our Friday podcast as well, as long as the death cross that I spoke about. All right, so let's go on to the NASDAQ. Sorry, let's go to the Q, NASDAQ 100. Same thing, death cross occurred last week. Massive hammer on huge volume, up 7.29% on the week. Again, a lot of work to do, a lot of overhead, but we definitely held these April lows on the, on an intraday basis. So that's key. Looking at the weekly, we broke through these bubbles here, but closed above on the week. Broke through these, held this, and it kind of came down here close and retested. So Q similar, big hammer on the biggest volume that's traded. Looks like it's even bigger than back here in 23 into like March of 22. So that's a pretty good sign. Equal weight here on the Qs. Don't need to go into this too deep. Let's take a look at the equal weight and see. Yeah, basically the same thing. Russell, roughest shape of all. But again, broke this 2000 level that we kind of been referencing as long-term support. But again, this is the riskiest area of the market and it's been hit the hardest. But similar look, but way below the 200-day moving average still. VIX peaked out at 60, which going back several months, almost the third, fourth highest VIX reading, with the financial crisis getting up to 89 here and 85 and the COVID bear. So not quite up to the 22. Well, this was last year, but elevated nonetheless. US dollar hammered down 3.14%, and you can see it's at multi-year lows going back here to 2022 levels, March, April of 2022. Big spike in the bonds that we talked about. Again, backed off a little bit, but definitely not the direction that the Trump administration wants to see this go. And here's the 10-year yields up to 4.49% last week. TLT is the long bond price, and that closed off the lows of the week, but it held support down here in this big 16% consolidation area. So perhaps we'll hold and start backing off. That would be bullish for stocks. Energy with a break-even close basically on the week. Bitcoin showing 3, 4 weeks, 5 weeks tight here. Very interesting. So very tight, and also still really holding this post-election gap area. So that's something to watch, perhaps, taking positions on this trend line break, which it's right there. So we'll keep an eye on that. Semiconductor index down a ton from the high, from here to here, about 44% from highs to lows. They were probably ground zero for the most damage, along with the Magnificent Seven, but just a big gap down low here on Monday, and closed on the week. Again, big volume, up 9.28%. Biggest volume those have traded since way back in 2021, and then the end of the spring through the mid of 21. China, same thing, just still down on the week. Again, there's some potential rumblings of delisting Chinese equities in the U.S. as part of the trade war against China. Silver reversed, had a 7% increase on the week. Gold exploded to new highs, up 6.5% on the week. So gold, huge week, very extended. Gold miners also just extended 1, 2, 3, 4 days up in a row on the week. Europe up 4.93%, and the Magnificent Seven recovering most of last week's loss, up 8.46% last week after being down 10% the week before. The biggest volume this ETF has ever traded up a week. Not sure why eBay's in here. All right, so let's go to the Mag 7. Go through those pretty quick. Again, Apple's going to probably be up pretty nicely on Monday on this announcement today that came out with Trump exempting cell phones and chips and a lot of electronic devices. So down 35% from the highs, up 5.19% on the week. We could see this thing rally up, fill this gap potentially. So we'll keep an eye out on this. Amazon, a big week, recovering most of last week's losses. Google, a little bit weaker. Meta, rejected at the 40-week and 200-day this week, but one of the few that's basically close to that 200-day. Microsoft with a decent week, up 7.95%, the biggest company in the world. NVIDIA with a huge recovery, which is good to see, up 17.62% on the week. Still below its 200-day moving average, but nice day on Monday and Wednesday, and closed very close to Wednesday's levels. So again, decent volume, not huge volume, but the first accumulation week since this phase where it was running on the whole AI ramp when it broke out of this nice little base back here in 2023. So again, that was the one thing that always bothered me about NVIDIA. There were no accumulation weeks, big distribution week here on the DeepSeek. Declining volume along the way here as stock price was rising, which was somewhat of a wedging type action, but nonetheless, it kept going higher. But again, first accumulation week, which is nice to see. Tesla also with a big accumulation week too, and more of a supporting week here, but still some damage and work to be done. But this bottomed also on Monday. Basically a slight undercut of these lows from early March. So a lot of this stuff could be ready here. I think with the good news on Monday, with some taming of the tariff talks, now we move on potentially another 90 days before we hear about this, and we'll see how the market behaves. And finally, going through the watch list for the week, with this big CDS increase in Medicare and Medicaid reimbursements, some of these stocks look pretty good. MOH, not sure if they benefit from this, but this is trading pretty tight. PGTX had a nice shakeout this week on, I think, some misinterpreted news from another competitor that has an MS drug in the pipeline, but shook out, came right back, and closed above the 50-day on the week. So this is one of my favorite stocks. Shook me out last week on my stop, but looking to get back into this. Indian Bank still looking good. IBM, cup with handle. Altria Group, again, defensive stock. Not much juice here, but holding in there. Halozyme is the other company here. They have a drug delivery system that Roche and Bristol Myers use. Big customers, decent growth. Nice accumulation week here, still in this space. Primo Brands, they basically bottle and distribute every major brand of water you can think of, including some of the higher end brands. Deliver to your house for some of these services for glass bottle for your water dispensers. Saw a post on a reel where people are paying upwards of $200 a month for their water cooler and their water supply for the month, but they sell basically every brand, and this thing's holding up very well and very strong earnings, canceling characteristics. So this is without a doubt one of the stocks to watch for a potential breakout. I think Kratos Defense looking very good. You've got the relative strength making new high, closed at the highs of the week here, bounced off the 200-day moving average late last week, or I'm sorry, the week before, and then just had a great week. Good volume, just a lot of accumulation here. BJ's wholesale, these discount and warehouses are looking good. Ollie's is looking very good, double bottom base. We've been talking a lot in our nightly webinars about the double bottom bases setting up, and you'll see that this is probably the prevalent pattern. And Ollie's with a 3-week tight here. O'Reilly's with a 3-week tight in the automotive area, AutoZone. MicroStrategy and Bitcoin talked about the trend situation here, right up against the 50-day moving average here, potentially some type of a trend line break going through up here. But this looks very interesting and had a huge accumulation day here and closed just slightly above that. So that looks interesting. LRN in the consumer education area, again, a blue dot. Celsius is more of a very fast turnaround after this big sell-off, and now back above the 200-day moving average, just very tight. And after some big accumulation bars, made a new acquisition, still, distributed through Pepsi, so the stock could quickly come back and looks good. eBay, again, with a blue dot on the weekly. Again, this is another tariff play, as secondhand merchandise and so forth becomes more popular if some items are very heavily tariffed from China. So I've got my eyes on this again. A lot of these have these double bottom base looks, but, we're going to see some of those. Another Indian bank, HDB, with a huge cup with handle breakout, not on any volume, but both that and the other stock we referenced looks good. WGS, this is a biotech, and it's a stock I've been watching since this massive 45%, 47% gap up. Again, somewhat of a double bottom base here, but with a potential buy here above 100. Palantir couldn't get through the 200-day moving average, but a huge week. One of the big stocks from a former leading, bull market where just was able to recover and hit the 200-day moving average on Wednesday and had 2 tight inside days here with tight closes. So watching that closely. Axon, again, not ready yet here, but bounced off the 200-day moving average and had a strong showing last week. Sprouts, blue dot. T-Mobile's been hanging in there, blue dot. Uber, again, somewhat of a double bottom base, but again, I think, with this upper pivot, more in the lower end or the middle end of this, and then a big lower low, it's a flawed double bottom base, but nonetheless was able to get back above its 200-day. But the same thing, the double bottoming, but flawed because you've got this pivot way down in, the lower end or the lower third end of this first drop. So again, you undercut this low here, held with a nice hammer on Monday. But one of the dynamic companies with canceling characteristics, innovating in the fintech space that we'd be highly interested in. Spotify, same thing. Again, pattern rec picking up a double bottom base just because I think this uh, this first peak is in the upper end of this first drops range. TJX discounter, again, looking good. Slow stock, but very good. And it would be a nice double bottom base breakout. United Health had a huge week on this CDS reimbursement increase. Again, this stock got hammered here, but it's looking good. They have earnings coming up here next week. CVS, also a beneficiary of the CDS reimbursement increase as well as restructuring. I think maybe there's talk about this company going private, but nonetheless looks pretty good after really a rough stretch here. Cardinal Health, another healthcare. Lore Holdings. Actually, this doesn't meet our volume requirements, so disregard the stock. Wouldn't be a stock that GROTECTION could buy. Netflix has earnings this week, but this is another one that's just below its 50-day moving average, and earnings on Friday, and had a huge earnings report last quarter where they gapped up on 300 million subscribers. I think they're now not going to guide subscriber growth, but this and Palantir are two of Don's favorite stocks here that are ready to potentially go. HEICO in the aerospace area. Walmart with a big recovery this week after kind of bear flagging down here, but with some definition on the tariffs, I think you're getting a little relief here. Copart in the automotive auction area had a big week on huge volume. This looks interesting. Dutch Bros is a can slim type stock that, again, a little weaker than most, still below its 50 and 21 EMA, but potentially like a trend line break play above 60. If the right things happen and the market starts looking better. CrowdStrike, also a double bottomy type stock, but again, this peak's still kind of in the lower middle of this, so pattern I'm not picking it up, but over this 392 would be interesting. And finally, Rubrik, again, because this drop, and this is in this upper part of this initial drop here, you got pattern picking this up, and this is actually a very nice double bottom base, still a long way from the pivot. Maybe a move above the 50 and some tightening would be nicer to see with some of these. Casey's General Store, a lot of accumulation here and new all-time highs. And DoorDash is another double bottom base we're watching. And that is it for our weekly review. So to wrap things up here, please don't hesitate to email me at todd@revereasset.com or contact me and subscribe to my Twitter handle. If you would like to become a client, our number is 855-REAL-WEALTH. Our website is revereasset.com. Thank you and have a great week.